Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a massive welcome to our community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. Always excited. You know that.
Yep.
Regardless of what's happening around the world, it's exciting that we get to carve out this space here to learn about investing, learn about what's moving markets, and better our financial futures, explore the possibilities.
That's it.
So what are we going to be doing today?
We've got a Pimp My Portfolio where a community member puts their portfolio under the microscope for Adam Dawes to provide some ideas on how to improve it. We're going to take a look at where Google is at and the impact that AI is having on its search business. But as always, Ren, we are going to start with the news that is making headlines around the world.
News and markets.
Headlines that we're going to cover today. Good news for the first time for Aussie home buyers. Australia's population growth slows. Well, it's always bad news for Aussie home buyers. Virgin Australia is returning to the ASX. Tobacco sales are plummeting. And someone's had a good day, and that is Tesla.
Yeah, well, let's start with Australia's population. The Bureau of Statistics released the numbers for 2024. Australia's population grew 1.7% to 27.4 million people. It was in our lifetime at crossed 20, wasn't it?
Absolutely.
Yeah. But here's the news. So the key part of the housing supply and house price story has been overseas migration. And net overseas migration was above 500,000 a year. To be fair, that was playing catch up where post-COVID, where in the COVID years it was very low. But it was a high number, and it had people concerned, and housing supply couldn't keep up. And a lot of these people were becoming renters when they first came to Australia, so they weren't necessarily becoming home buyers, but it just added additional pressure to the housing market in general. So in 2023, 530,620 people came to Australia, net of people leaving. But the good news for first home buyers and renters, in 2024, that number dropped to 340,800. And so what we can see is we're getting back to a more normal pre-COVID level.
Which is good. I mean, if you were listening to some of the politicians, you wouldn't know that was the case because they're still saying that we're at record highs, particularly in the opposition. But good for, better news for Australian housing in terms of the supply side, but I think still a severe supply shortage.
Yeah. I think the headline is like the population story is normalizing as people said it would post-COVID.
Yeah.
But obviously the bigger questions remain around housing supply and also what these interest rate cuts are going to do to demand. But I guess that's one factor that is being lessened somewhat.
Yeah. Staying here in Australia, Virgin Australia is back listed on the Australian Securities Exchange. I think they raised about $440 million in an IPO. And they're now back trading on the stock exchange after they were delisted during COVID, where they went into administration.
Yep.
And Bain came over and came in and took them over and have been working towards this IPO for the last, 5 years?
Yeah. Now they were working towards it and they've had to pull it a few times. And then the IPO came the IPO, pre-IPO period where they were raising the money came just as the Israel-Iran conflict kicked off. And if you think about an airline, one of their biggest costs and one of their biggest variable costs is the cost of fuel.
Yep.
And we've seen oil prices absolutely whipsaw. So oil prices were up about 11% from when Israel first launched its strikes to when the US joined and bombed those nuclear sites. But then Iran responded and attacked that US base, and everyone thought, this is going to escalate the conflict and oil prices are going to go up even further. But oil prices fell 9%.
Yeah, it was because it was a pretty muted response from Iran.
And a number of Iranian officials briefed the New York Times and said they warned America beforehand.
Yeah.
And then Trump tweeted it out. I think he said the quiet part out loud. But I think the Iranian officials said they wanted an off-ramp. And so oil traders were like, okay, oil prices aren't going to spike as much. Prices fell. But God, what a whipsaw.
What a whipsaw, yeah. Interesting time to be trying to raise money as an airline.
It did make me think, you know how you're trying to turn $500 into $5,000?
Yeah, you want me to long...
No, were you long oil?
No, I wasn't.
Oh,
no,
good.
no,
Yeah, that would have been a sensible trade as conflict was heating up. But
that's a good point. That's a good point. Did think about it, but no.
It's just another reminder, don't play the short-term game.
Yeah.
Don't try and trade on
Yeah.
geopolitical news.
Yeah. The only time to go long oil was when it was at negative during COVID.
Yes,
That was the time.
That would have been the time.
That was the time.
So one more story that I know is close to your heart, Bryce,
No,
which is tobacco sales are plummeting. So we got some data from Metcash, and Metcash is the grocery wholesaler and hardware wholesaler, but grocery wholesaler in this instance that supplies IGAs and independent supermarkets. They reported a 20% drop in cigarette sales this year.
Wow.
And they said a large part of that is because you were buying cigarettes at Woolies these days.
No, not true.
No.
You've got vapes, but you've also got the tobacco tax or excise.
Yeah, I don't think vapes. Vapes may be a big part.
Definitely.
But not a 20% drop.
No.
So the tobacco excise. So this adds some colour to the debate that we've been seeing. So for people unfamiliar, the government taxes cigarettes.
Yep.
That's why Australian cigarettes are some of the most expensive in the world. Bryce is very familiar with that. He complains about it constantly in the office. The tobacco excise increases twice a year, March and September, in line with inflation. But there was an additional government policy put on that between 2023 and 2025, there would be an additional 5% annual increase for 3 years. So 23, 24, 25, which has just made the price of cigarettes incredibly expensive and has led to a booming black market.
Yeah, I was going to say.
So what it's meant, so this Metcash number confirms what we've been hearing from the government, which is while they're raising taxes on cigarettes, the revenue they're earning is actually decreasing.
Yeah.
So it peaked in 2019, 2020 at 16.3 billion. By 22-23, it was 12.6 billion.
Yeah.
This financial year, they expect 7.4 billion.
Yeah, they've actually gone too far. They've completely killed the market, and
Of course, you think they've gone too far.
well, so look, it has obviously done. It has been successful in reducing the amount of tobacco that people are buying through the channels.
Like the longer term that excise has, but this recent increase.
Yes, this recent too far. But to put some numbers just to highlight the illegal tobacco trade. We were at a party the other night, and one of our mates, not me, very clear
here we go.
Not me.
Oh yeah, my friend knows about the illegal tobacco trade.
This is not me. This is Ren taking the piss.
You're telling the story.
Yeah, they pulled out some ciggies, and
dangerous pulling them out around you.
They're buying them at the 7-Eleven, not 7-Eleven, like your tobacco store or whatever. $7 a deck.
Really?
It was $7 cash or $8 FPOS for some weird reason.
Yeah, okay.
But $7.
Yeah.
And you can understand, this is now a serious problem in Australia.
And what does a deck go for over the counter?
I wouldn't know. I don't buy them. But when my friends buy them, I remember our mate Rohan, you'd probably know of him on Get Started Investing. He came on years ago. He lives in Singapore and was blown away when he came here most recently to buy a deck, $60.
Whoa.
$60.
The tobacco excise, like on a per cigarette level, have a guess at what it is.
As in, what's the markup?
What's the government tax before GST? Because there's also GST on the excise. But
percentage-wise?
No, dollar-wise. I've got the dollar figure. From March 2025, what do you think for one cigarette, like a normal cigarette in a deck, what do you think? What do you think they tax it?
$1.50?
Oh, close. $1.40
right.
per cigarette.
Yeah, that's nuts. Yeah. That's nuts. Yeah. Well, I mean, I wonder what they're going to do because they're only fueling the illegal trade at the moment and revenue's dropping. So, it'd be tough to walk it back.
I mean, you'd think that maybe cracking down on some of these tobacconists
Yeah, I know.
Whole other conversation.
That is a whole other conversation.
Anyway, let's move on. Let's go from some of the unhealthiest habits to the healthiest habits that you can do. And we're replacing our traditional what the with a even better question, who had a good day? And it's thanks to our friends at Hello Sport and their Good Day multivitamin.
That's it, Ren. The Good Day multivitamin is a once-a-day multivitamin sachet that you can mix with water. Quick, easy, done. I'm going to do it right now. I'm going to have my mix.
Yeah, there's over 60 health benefits, and importantly, it's the least you can do for your health.
Yes.
You know, if you're like Bryce and you've been hitting up the illegal tobacconist,
No.
It is the absolute bare minimum that everyone can do. It's easy, once a day. If you're watching on YouTube, you can watch Bryce drink it. If you're listening, you probably heard him shake it there.
It says drink immediately.
But while Bryce is drinking his Good Day multivitamin, I'm going to talk about who had a good day, and it was Tesla. No doubt, Elon Musk is having a good day and a good month. So Tesla's up more than 20% in June. It's back in the $1 trillion club. How was it?
It's good, Ren. Been having it for a couple of days. Yeah, great way to start the day.
Nice. Feeling mental clarity?
Always.
Nice. Yeah. So Tesla has been an absolute whipsaw of a ride. Like this stock, I don't know how people are riding it. So in the past 5 years, I had a look, up 540%, down 72%, up 280%, down 44%, up 45%. So volatile. But the reason for its rise recently was Tesla has officially launched its robo-taxi service in Austin, Texas.
It was launched to a small group, as you said, I think it was a small group of influencers, to be specific. But it's the first time that these cars have picked up paying riders without any human drivers, which is a pretty massive milestone. I think Cathie Wood has tied her valuation of Tesla to this moment. She thinks that it's going to be a stock price of $2,900 by 2030.
Yeah, well, Cathie Wood makes bold predictions to get media headlines, She thinks
90% of its future enterprise value is going to come from this moment.
Yeah, so I mean, like the vision for Tesla is a fleet of self-driving robo-taxis that when you're not driving your car, you can go and deploy for an Uber-like service, make the driver money, and Tesla take a cut of that. That's the vision that Elon and the team have articulated. We're a fair way away from that yet, because there is a caveat to this launch. There is no driver. And that is true. There is no one sitting in the driver's seat. There is a safety driver sitting in the passenger seat, though. Yeah. Think of the setup like a learner driver, you know, when the learner's in the driver's seat and then the driving instructor's in the passenger seat with a second set of controls, then they can slam on the brakes if they need to. And we should be clear that, like, that's not unusual. Waymo had a safety driver for about 10 years in their cars, but they just started testing in 2009. So Tesla is playing a little bit of catch up. The technology is different. Arguably the Tesla technology is more scalable once they get it right.
Yeah.
But yeah, Elon Musk, Tesla, they had a very good day.
That's it, Ren. Tesla has had a good day thanks to Good Day Multivitamin, the vitamin for people looking to do the bare minimum. Now you can pick up your vitamins using the code EquityMates for 10% off, or lock in a subscription for 20% off. Head to begoodhealth.com.au to pick up yours today. Welcome back to Equity Mates. It is time for...
Pimp My Portfolio. Pimp My Portfolio.
We have a community member on the line who has submitted their portfolio for our expert in the studio to review. Adam Dawes is the expert today. Adam, welcome.
Thank you so much. It's great to be here.
And Jack, we have on the line. Jack, welcome.
Hello. Yeah, thanks for having me, fellas.
Anytime. Thank you for submitting. So before we jump into it, maybe a quick little introduction to yourself.
I don't know how to introduce myself.
He's fumbled the bag.
Yeah, no. I'm just working software sales. I have a pretty crap portfolio, so I'm very keen to pimp it up.
Perfect. That's all we need. Well, Ren, why don't you take us through Jack's portfolio?
Right. Well, I reckon Jack's being a bit hard on himself, but I'll let everyone be the judge. So to start with, Jack's got two ETFs. He's got VDHG, the Vanguard Diversified High Growth Index. That's 30% of his portfolio. And then he also has the BetaShares Asia Technology ETF, which is 10% of his portfolio. Then he's got a number of individual stocks, 9 in total. In terms of largest to smallest holdings, we've got Fortescue, Goodman Group, SmartPay Holdings, Qantas, A2 Milk, Telstra, Adairs, Airtasker, and BrainChip Holdings. So,
Good
Dawsey,
mix.
some names there that have run a bit.
Definitely.
So, what do you have a nickname for this portfolio?
Well, it's a bit of a brainiac or a smart portfolio because you've got some brain chip and smart pay in there. So it's a bit of a that's the tag on that one.
Okay.
Nice.
But in saying that, I think I think, Ren, you put it right. That was a little bit sort of that the weightings are a little bit sort of are okay, but you could probably do a little bit better. And then I just wanted to, Jack, sort of just run me through why you picked BrainChip. Was that in the height of last year? Did you pick that one just because it looked good, or how'd you come about that one?
Yeah, it was purely. I had a mate who was very, very heavily invested into BrainChip, mentally invested, not necessarily financially, but he'd been following it for probably a year before all the hype, and so I took his advice and bought some stock probably just before the start of last year.
Right.
And then I sold half of it off because it went really well.
Okay.
And then I've just been holding it ever since. Yeah.
Okay, so that's pretty smart. So, yeah, that works with the portfolio. So, well done for taking some profits when you can. I think that's a
Definitely.
Good lesson there.
Do you want to just give us a quick sense of, holistically how the portfolio's come together, Jack?
Yeah. And I think along that same BrainShares kind of story, not BrainShares, BrainChip. The portfolio has kind of been put together the same way. So, when I started, they start young, and I was definitely looking at investing more as kind of like gambling, so buying a lot of stocks that had a bit of, I thought could be upside, like your Airtasker and your kind of smaller chip stocks. And then more recently, kind of as I've had a bit more cash and kind of had a bit more control, I've been buying bigger name stocks like Qantas and your Westpac, and trying to go for bigger name rather than get rich quick type of stocks. So that's where the ETFs have come in as well.
Nice. We've all been there.
It's a journey. It's a journey, isn't it?
Absolutely.
So, Dawsey, if you look at this portfolio as a whole, where do you want to start with giving some advice for Jack?
I think, Jack, you sort of answered it first of all, or first up, is that you've been on this journey and you started out with the small caps and then you're now moving into the quality. I think you got to stick with the quality. I don't think you want to move around in the small cap space unless you've got a really good idea. And now, like with the BrainChip, taking a little bit of profit when you see it, I think that's absolutely fantastic. So that seems like you're a little bit more of a mature investor than a lot of other people, because they just hold on to these things and they watch it go. And I've done it. We've all done it. Yeah. Everybody put their hand up. We've all done it, where you watch things go up and then you watch things go down and then you can't sell it because you've lost or lost your money. So I think taking that, but definitely staying with the quality. Certainly the Vanguard Diversified High Growth one is going to give you a little bit more oomph. Are you doing regular contributions into this portfolio, or how are you sort of doing that? You're sort of buying new ones. What are you sort of looking at?
So the plan is kind of like over a month or two, I'll save up a bit of cash and then dump a whole lot into, right now the plan, so my next ETF will be the JP Morgan or JEPI, the premium income.
Yeah.
But the plan is to kind of like save up, as much money as I can over a 1 or 2 month period, and then put it all into something bigger, so that I can wait it out a bit more and have it more of my portfolio in ETF.
Why do you want to go down the income route?
It's a good question. I think I'm not a very active investor, and I've learned that kind of, again, getting real. So, if I can put something in there that I know is going to kind of hold stable, or, I can wait it out a bit more and have it more of my portfolio in ETF.
Okay.
I think I'm not a very active investor, and I've learned that kind of, again, getting real. So if I can put something in there that I know is going to kind of hold stable, or, I can there is a little bit of, I've got the opportunity to take a little bit more risk on. So I'll put it in something that might have a bit more upside if I can.
I'd certainly look at definitely putting in an Aussie index in there as well, and then obviously looking at a US or a global index. And then I'd set up a regular contribution strategy. I don't know how much, sort of free cash flow that you have, but maybe like even $100 a month, putting that in, and on a monthly basis, you won't even miss $100, and you would then start to build a portfolio over time, and that regular contribution to some of those indexes are going to be your anchor, or going to be the weight to the portfolio, and that'll start to grow. And then as markets move higher, now they've certainly moved higher over the last couple of months. So if you were doing regular contribution strategies, you would have bought stuff on the way down, and you would have bought stuff on the way up as well, or some of those indexes. So that'd be my first thing, is you want to anchor the portfolio a little bit more to potentially some indexes. Now, you say that you've moved from the sort of high risk to the sort of lower risk, or the JP Morgan income side of things. I think that's a good idea. I think that you can certainly put more of that inside of the portfolio. I'd certainly be looking at taking the losses where you have. Potentially Airtasker would be one of those ones that you're in loss. SmartPay probably also, you're in a loss as well. Taking some of those ones that are in losing. I know people get emotionally attached to these stocks, and you've just got to come with a clear head, understanding where you're going, and then using that money to anchor the portfolio with maybe some index ETFs with a regular contribution strategy. And there are certainly Vanguard and Beta Shares do offer that kind of service for you in there as well. So I think that's probably the first point, getting rid of some of those losers and putting some anchoring in the portfolio.
Are there any stocks in there, Jack, that you are emotionally attached to, or have you been looking at those wondering what to do with them?
No, you know what? For those small ones, SmartPay has been SmartPay and Airtasker are both ones that I bought like 3-4 years ago now, and they've been sitting there at a loss pretty much the entire time. And I think you're exactly right. I just couldn't get rid of them because they're in the red. And they're far in the red kind of shortly after I bought them. So, I should absolutely just take the loss and move on, I think. It's a good time.
It's a really tough one to do, yeah? It's really tough, but I think it's well worth, if you're looking at a portfolio and you want to pimp it up a little bit, these are the kind of things that you need to, get rid of.
So let's close on a good note, on a stock pick that has done incredibly well. I'm not sure when you bought it, but whenever you bought it, you're probably up, which is Goodman Group, which is up, 120% in the past 5 years before dividends. It's run a lot. How do you think about a position like that, Dorsey?
Yeah, so Goodman Group obviously is a fantastic industrial REIT, real estate investment trust, that has done exceptionally well on the back of data center growth. Now, that was last year's story, data centers. That was last year's story. And the thematic is certainly going to continue with that. And Goodman Group has definitely come back from its highs. And even when they just raised $4 billion at $32, to buy some other companies in the US, and then, offered a share purchase plan at 32, and I was buying for clients at 30. We're a little bit underwater on that last transaction. Like I talked about, buying quality. And I think that is absolutely quality in that side of things. And it's always that REIT that I gravitate to. So I'd definitely be holding it or trying to add a little bit more to it. It does form a large part of the index anyway, because it is the largest REIT inside of Australia. But it's such a well-run business. I'd be topping up any stage that I can on that one.
Nice.
Well, Jack, when you introduce yourself, I think you were maybe a little bit too harsh on your portfolio. There's certainly some good stuff in there. So keep going, because I think you're on the right track.
Appreciate it. Thank you very much.
Nice. Well, yeah, I think it sounds like unless you have any other burning questions, I think the takeaways really from Dorsey are focus on growing that core a bit, get rid of the weeds in the individual stocks, and let the quality companies grow through. So Thank you so much for submitting today, Jack. We really appreciate it.
No, thanks for your time, guys. Appreciate it.
And if you would like to submit to Pimp My Portfolio, head to equitymates.com/contact and you, just like Jack, can come on and speak with one of our experts. And similarly, if you'd like a professional review of your portfolio, Adam and his team offer a portfolio health check. For $825, you'll get a personalized investment portfolio review, expert guidance aligned with your goals and risk profile, and a statement of advice to take and put into place. So head to equitymates.com/advice and you'll be able to get put in touch with Dawsey and the team. Google has just become the most profitable company in the world, but the stock is down 13% year to date, and we wanted to find out why. And Ren, it's been, as you know, we've been talking about this a lot on the show recently, or I have particularly.
Well, no, we both have.
Yeah, about the impact that AI is having currently on Google and trying to figure out where it's going to land.
Yeah. Well, let's start with the intro there you just gave, because before we get into the AI, it's worth noting that Alphabet, Google's parent company, has leapfrogged Microsoft and Apple, whose trailing the net profit for the past 12 months, like the trailing 12 months, $97 billion each of them. But it's also leapfrogged, God, I can't speak, Saudi Aramco.
Yeah, which is surprising.
Trailing 12 months, they've done $102 billion in profit.
Saudi Aramco being the world's largest oil producer.
Yes.
Yeah.
Alphabet, trailing 12 months, $111 billion in profit. So the question, Bryce, that you're going to ask is, have calls of Alphabet's demise come too early?
Yeah, the most profitable company in the world trading at 18 times or PE.
I know.
What the hell?
And like obviously the question is like, can it continue growing? Yeah. And that's the question you're going to answer by the end of this segment.
So I kind of just wanted to go back and remind myself of like everything that's kind of transpired over the last few years to try and be clear on where Google currently sits. And this is all through the lens of its search business, because its search business is still, you know, a majority of its revenue comes from its search business. So let's go back and just set the scene. So late 2022, ChatGPT launched, and that was really when I think we sat down and said, this could be the first time that really Google has a major competitor, because up until then, they just absolutely dominated search. They then, I don't know if you remember, Ren, but they launched Bard, which was their sort of chatbot equivalent in 2023, but it was an absolute disaster. They made a video of it trying to answer a question about a sort of space satellite.
Yeah, it hallucinated something.
Yeah, it hallucinated and wiped $100 billion off Apple's market cap in a single day. Alphabet's market cap.
Would have been a good time to buy. Because since November 2022, depending on where you look, Alphabet's share price has doubled.
Perfect. Wow. Well, there you go. Has it really?
Yeah.
Shit. Microsoft then came in pretty quickly and integrated ChatGPT into Bing, which is important. We'll get to later because it's sort of the main AI rival. So the last 2 years is where it's really started to sort of play out for Google. So Google still holds a 90% share of global search. That is down, though, from 93% in late 2022. So 2022, 93%. 2023, it was 91.5%, which is when ChatGPT launched. 2024, it's 90%, and now it's the first time that it's under 90% at 89.6%. Bing has gained 1%, but obviously that's not hugely material.
But wait, so the fall from 93% to 89.5% is AI searches?
Yes.
Okay, so they're being aggregated.
Yeah.
Okay, yeah, cool.
Yeah. So ChatGPT is on an absolute tear. 2023, they had 300,000 daily visits. If you fast forward to now, they're getting 150 million visits a day. So pretty significant. When I was looking at research, though, Gen Z still turning to TikTok and Instagram.
Oh, this is pre AI. This has been a story for a long time.
Yeah,
Again, I remain
turns to
unconvinced.
TikTok.
Yeah. Different contextual searches.
So, what's Google's response been is a question, and how are they going to try and maintain this search dominance? So, they've launched Search Generative Experience, which is what we've spoken about on the show, Ren, and you might notice it when you're searching Google now. It's where you will now be given like an AI overview of what you search before all of the links come in. Now, that is now generating 1.5 billion queries a month, which is obviously pretty significant. They now have AI mode as well. I actually went to find this and I couldn't see it on mine, but when you go to the Google homepage, apparently you can search in AI mode and it'll create a completely different search page for you.
Yeah, you need to go via Search Labs. Apparently.
Search Labs, okay. But it gives you tailored responses rather than a list of blue links. So they're really trying to play out for the extended answer side of things. And that's because they're noticing people's behavior is changing. And I see it in the way I'm searching now as well. People now want direct answer rather than just a list of links to sort of work through. I don't know if you're noticing that as well, but I mean, particularly with AI overview, they are now providing answer rather than link for continued research. That's where it's all kind of heading. What does this mean for revenue though? Because I think that's the main point. So search ad revenue is actually still growing, 7 to 8% year on year. But the big number to watch that I sort of thought, okay, this is interesting, is the ad click growth is slowing down. So down to 2% from 5%. So effectively, revenue's still growing, but the amount of ads that are being clicked is falling because the links they're putting in front of people is becoming superseded by this AI overview.
Yeah.
The other thing to note is that AI is super expensive, and so they're now starting to see the cost that goes into providing the AI overview is starting to eat into the margin of just providing the blue links.
Yeah, but they still have become the most profitable company in the world.
Yeah, for now. Then you now might start to see in the AI overview, they are starting to build in monetization in links in, I guess, like little squares below that are all sponsored. So starting to do monetization in the AI overview. So where to from here? So Google CEO Sundar Pichai obviously is saying that AI isn't replacing Google search. It is becoming Google search. And they, I guess, are really trying to, they have one of the greatest AI engines in the world, which is DeepMind. And so they're really, I guess long-term have a really strong AI strategy and trying to ensure that the way that people search still remains through, I guess, the Google platform while keeping advertisers happy and publishers happy. The valuation we've spoken about a lot on the show. Analysts at the moment are pretty cautious, and we've had some experts on the show at the moment come in and sort of say that it's a wait and see for Google. They're obviously well placed with the traffic that they get, but can they keep that traffic and monetize it as more and more people start to turn to alternatives? But the risks are there, slowing clicks, higher costs for search. There's also a bit going on with the default status of the Apple and Safari. Safari came out and said for the first time ever, they've seen a reduction in Google searches through the Safari search engine as well. So my take for this answer, Ren, is I'm actually going to take some chips off the table. I've had a really good run with Google. I'm going to stay invested, see what happens. But I know we've just said that they're the most profitable company in the world. But I don't know. I still feel like I just see how people are using it. I genuinely reckon in 5 years, blue links won't be a thing. I don't think that'll be a thing. And the question is, can they find a solution quick enough is where I'm currently at.
There you go. I mean, I don't think anyone thinks blue links will be a thing. Like, no one's going to be arguing for that. But that's not the important question. Like, the important question is, where does search traffic go, and where does the revenue, like, where does the advertising revenue go?
Yeah, I feel like they're behind at the moment in it, and that search engine's going to have to effectively turn to a page like ChatGPT, where you just it should just be Gemini really now.
Yeah.
Do you know what I mean?
But I think the important thing is, where your thesis isn't a screaming yes, it should be a no.
Yeah.
There's enough opportunities out there that, like, as soon as you start wavering, it's time to take chips off the table.
Yeah.
Yeah.
Time to go.
Yeah. Because, like, we could have a back and forth, and I could talk about, like, the sum of parts analysis, and if you give YouTube a Netflix valuation and you give cloud, a valuation to another fast-growing SaaS company, then all of a sudden you're like 3/4 of the way there to Google's current market value.
You could say that until they are the majority of the business. I don't think that I think there's still a fall to go. So chips off the table, baby.
All right, well, there you go. Let us know if you agree with Bryce, if you disagree with Bryce in the YouTube comments. It's the irony of debating Google's long-term future in the YouTube comments isn't lost on us. But that'll do us for this episode. Appreciate you watching or listening. Make sure you subscribe wherever you are to not miss a future episode. And if you want to keep up with the news of the day, sign up to our daily news email. The link is in the YouTube description or the podcast show notes. But Bryce, that'll do us for this episode.
Love it.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.